So I always refer to this as a fasten your seatbelts presentation, because I'm going to cover a lot of content. But the good news is that we're going to have plenty of room for questions and answers at the end. So jumping right in, one of the advance my screen here real quick. So unlike the SBA, I'm on a little bit of a disadvantage to where everybody knows who the SBA is. But a lot of companies in the United States, they've never heard of Exim before. They've never heard of the Export-Import Bank of the United States. So I like to do a little background as to who we are. We are a federal government agency. We're an executive branch agency. We're one of the best kept government secrets out there. We've been around since 1934. So we're into our 88th year, yet a lot of companies have absolutely no idea what we do. We are the official export credit agency for the United States, or ECA. And you're going to hear me use that term ECA a lot over the next 15 to 20 minutes. The role of an ECA is in essence to level the playing field. We want to end my role as Exim ECA is, and this has been a role since 1934 when we were founded 88 years ago, is we want to make sure that we support U.S. jobs. And I'm going to come back to that in a little bit because we're going to talk about U.S. content. Ian mentioned content a little bit. I'm going to talk a little bit about content because it's one of our really important rules as far as what we can do. There again, it all goes back to the fact that we're trying to help U.S. companies export, because the more they export, the more people they have to hire. One of the myths of Exim Bank is that if you're not Boeing or GE or Case New Holland or Caterpillar, you're too small for us. Absolutely, positively incorrect. Some of our friends in Congress, they seem to have issues getting this right. But 90% of the number of transactions that we touch on a regular basis are for small business. And when I'm talking small business, I'm talking one-person operations, two-person operations. No company is too small. Now, we work with the big companies too. So in the flip side, there's no company is too small, no company is too big. But the majority of the time of my time is spent working with smaller businesses, and there's no transaction that's too small. I can, I've insured, and we're going to talk a little bit about insurance in a little bit. I've insured invoices that were just, thousands of dollars and less than 10,000, $4,000 or $5,000, $6,000. It's a very flexible program. And so if you ever hear anybody talk about the fact that, Exim only helps the big guys, or, it's capital, it's cronyism and all that kind of good stuff. Not true. We like our small businesses very much. ECAs. Let's talk a little bit about ECAs, these export credit agencies. There's 114 of them in the world. So it's not just about Exim Bank. Every developed country has an ECA or an Exim Bank. Your developing countries are growing Exim Banks. And this chart this is 2020 closing figures. 2020 down year, obviously. 2021, when we report those figures, a down year. But all that I want to, we could dig into this slide a whole lot more, but it just, every developed country does this. So for the United States in 2020, we did $1.8 billion in what's called official export finance. Now, 1.8 billion, that's not too bad. Everybody, we like billions. We like the B word. Until you look at China. They did 18 billion, 10 times the amount that we did. That circle in the middle, that's the Eurozone. If you add all those little circles up and get a big, for the big number, it's about 50 billion. So I guess the moral of this story is we could be doing a whole lot more. We would love to be doing a whole lot more. It's just, we're still one of those best kept government secrets out there. As a government agency, they frown upon us taking out ads alongside Colin Jost and Scarlett Johansson during the Super Bowl. So word of mouth. I do a lot of these type of events. I like it even better when I can do them in person. I think hopefully in the near future we'll be getting those. So we can talk about this chart more later if you guys want to. So what, at the end of the day, and we talked a little bit about this, what's the role of an ECA? It is not to compete with the private sector. It is to supplement the private sector. It's to help the private sector. I'm not trying to take business away from banks. I work with banks. I love my banks. I help them do their job a little bit better. Ultimately, the role of an ECA, and this is my most favorite slide of the whole program. If you're old like me, you know who this is. If you're younger, this is from the old Popeye cartoon. This is Wimpy. Wimpy loved his hamburgers. Wimpy never had money to pay for his hamburgers. Trust me, if you're an exporting company, this is every single foreign buyer that you talk to. They want to buy your US made product. They just don't have the money to pay for it. So what does that mean? They ask you for supplier credit. They're asking you to export the product to them today, and they're going to pay you for it in some point in time in the future. They want you to arrange financing for them. They do not want this. I'm a former letter of credit banker. For those of you on the call that know what this is a letter of credit transaction. Now you might say, oh my God, what? Trust me, these work. I love my letters of credit. Just trying to put this out there. This is why your buyers, if you ask for cash up front, you may not be getting the response you like. If you ask for them to go get a letter of credit, they may not be happy with that either, because letters of credit can get complicated. You have to know what you're doing. They can be expensive. So basically, when your buyer is asking for you to arrange some type of financing, it's not this. What they are looking for, though, is, and we have a couple different products that help this, we help arrange financing for them. Now, as a government agency, I don't lend money. The SBA doesn't lend money. But what we do is, in my case, we work in the world of insurance and guarantees. So the first one, I'm going to kind of touch on these three core services very quickly. I want to spend the most time on that very first one, the Foreign Accounts Receivable Insurance, because that's our bread and butter, and that's the one that we work with most of the companies on. What is Foreign Accounts Receivable Insurance or export credit insurance? It's exactly what it sounds like. It's going to give you the flexibility to sell your product outside the United States and treat that buyer like you would a domestic customer. You're going to give them terms, 30, 60, 90 days. Most companies, that scares them to death until I explain that with my insurance, and I'm going to kind of dig into that a little bit more, you're going to be able to transfer the majority of that repayment risk over to the US government. We always like to jokingly say we're in the sleep business. We give you the ability, we give the US exporter, we give you the ability to export your product, await payment for 60, 90 days from date of export, knowing that if you don't get paid the way you're supposed to, you're going to call me and I'm going to take care of it. In essence, that's Foreign Account Receivable Insurance. I'm going to dig into a little bit more. The really nice thing is it's a risk mitigation tool for you. It's a sales tool, you know, for when you're extending terms. I attend a lot of trade shows, and I know for a fact that foreign buyers do not like to, as I said before, they don't like to hear cash up front. In some countries, it's impossible. There's some markets to where their central bank will not allow them to pay for product until the product is in country. So cash up front is impossible. It's illegal in some countries. So that's not going to work. Letters of credit, talked about letters of credit. What they want is they want the flexibility. It's a sales tool for them. You know, you give them 60 to 90 days to pay. That's a lot friendlier than cash up front. It makes your bankers happy. And that's that last point. Foreign accounts receivable, if you talk to your commercial lender, they don't want to talk about them. They're certainly not going to let you borrow against them. Basically, a foreign account receivable is a dead asset on your balance sheet until you insure it. I get insurance in place. I assign that policy over to your banker. They will then let you borrow against that foreign account receivable, just like they would a domestic account receivable. They'll include it in your borrowing base. It's no longer a debt asset. So how does this work? And the point of this slide is I really want to, I'm going to talk a little bit more about that broker part a little bit later. But what this is in essence is you got Exim and the U.S. exporter. I put an insurance policy in place. What does that insurance policy do? I vet your buyer. I make sure they're credit worthy. I put a policy in place that basically says, hey, look, if you don't get paid, you're going to call Mark, you're going to file a claim. You have transferred the majority of your repayment risk over to the U.S. government. And there's not many countries, and I'm going to talk a little bit about our country limitation schedule. Ian mentioned this earlier. I'm going to talk a little bit more about that, but there's not too many countries that I'm closed for business in. So what is my insurance? When I talk about this, what does it cover? It covers commercial risk. Commercial risk is basically something bad has happened to your buyer, and that's why they can't pay you. It covers political risk. Something bad has happened in your buyer's country, and that's why they can't pay you. So commercial risk is, it's slow pay. Your buyer filed for bankruptcy. They declared insolvency. That's why they can't pay. Political risk, a good example of this is, obviously war, revolution. That's never a good thing. Central bank turns off the faucet and basically says the local currency can no longer be converted into a hard currency for you to make payment. That's covered. That's currency transfer risk. Basically, it's not your buyer's fault that they can't issue you a wire transfer. It's just that the central bank ran out of dollars. They ran out of euros. They ran out of pound sterling, and you just can't get paid because their central bank has turned off the faucet. That's covered. I always like to say that our policies come in two flavors, multi-buyer and single buyer. So I've got a couple examples of the multi-buyer I'm going to talk about and the single buyer as well. A multi-buyer is 95% protection. So you're going to set up a policy with me. We're going to prove your buyers. And if you don't get paid, you're going to file a claim with me and you get 95% of what's owed to you. So you're transferring all but 5% of your repayment risk over to the U.S. government. Point of this slide, Express Insurance. It's my training wheels multi-buyer policy. It's phenomenal for young exporters that have maybe not exported before. Maybe they've not used export credit insurance before. They've never extended terms on exports before. They're kind of newbies. They're new to this. So we have an Express Insurance training wheels. Lots of hand holding go along with this policy. And in spite of all the hand holding, if you look on the right side of the slide, if you're offering up to 60-day terms, it's going to cost you a whopping 0.65%. So a $100,000 invoice, you're going to give your buyer 60 days to pay. You insure it through me, which provides you 95% protection on that $100,000 invoice. I'm going to charge you $650. It's very inexpensive. And it's very easy because it's so cheap. It's easy to pass that cost on to your buyer, and they will happily pay for it. Because to pay you $650 on that $100,000 invoice is a whole lot easier and a whole lot cheaper for them having to go to their bank and borrow the money. So that's just an example of a multi-buyer policy. What if you don't need training wheels? What if you're an experienced exporter? I have a select risk multi-buyer. I have a standard multi-buyer. I've even got a small business multi-buyer. Lots of flexibility to where you can either come to me with your entire export portfolio. I can put a policy in place with 95% coverage, or you can come to me with a portion of your export portfolio and I can still give you 95% coverage. A lot of companies I work with, they have multi-year relationships with some distributors. They have no interest in insuring those guys. They know they're going to get paid. They self-insure those. They come to me with the buyers that are maybe a little newer, maybe a little riskier countries. Maybe it's Latin America and they just have a Latin America policy that everything in Latin America is on insurance. Everything in West Africa is insurance. Western Europe, we self-insure those. Lots of flexibility, but at the end of the day, 95% cover. Just for time's sake, I'm going to skip through our case study a little bit. I'm going to jump right to our single buyer. I want to allow plenty of time for Lou to be able to talk about the STEP grant after I finish up. Single buyer, it's exactly what it sounds like. I'm not going to look at your export portfolio. You're going to come to me on a buyer by buyer basis. I'll put coverage in place. It's going to provide 90% coverage, not 95, that's multi-buyer, but under single buyer, 90% coverage. You're still transferring all but 10% of your payment risk over to us. Tends to be a little bit more expensive in this example. This is UAE. So if you have a 60-day payable in the UAE, 90% coverage, I'm going to charge you 0.67%. So not 0.65%, it's a little bit more expensive because it's select risk. It's not, to put it in common terms, you're basically a single buyer policies, you're basically coming to me and you want to insure your 16-year-old son that just got his driver's license, but you don't want to include anything else. You don't want to give me your homeowners and your rental property and all the other drivers. You just want me to take that high-risk 16-year-old son that just got his driver's license. We can do it. Coverage is 90% instead of 95, and typically the premium is a little bit more expensive. I'm going to fly through the case study here. Eligibility requirement. You just, I don't really have a good solution for startups. So we just ask at least be in business for a year, or if you are less than a year, do you have a management team that is experienced in doing what you do? If that's the case, I can probably get around that 1 year in business eligibility requirements. Qualifying a foreign buyer, I've got a really nice infographic on this. Obviously, I want to make sure that your foreign buyer is credible. I want to make sure there's a reasonable assurance of repayment. Whether that's trade references, credit bureaus, or I look at financials, we're going to make sure that that we're putting risk where it belongs. Couple more quick slides. Insurance brokers, we always work with brokers. Don't let the B word scare you. I pay for them, but they're the ones, when I talked about that express policy, they're the ones that provide that hand holding. So I can't speak highly enough about our trade credit insurance specialists that help us. Foreign buyer financing, just to make sure I have enough time for Lou, I want you to think planes, trains, cranes, big capital equipment. Instead of 60, 90 days, your buyer may need 5 to 7 years. I've got a fix for that. I don't lend the money directly. We work with a network of lenders and non-lenders. They provide the 5, 6, 7, up to 10-year financing under medium term for your buyer. Very attractive interest rates, better terms, better rates than they could possibly get in country. That's under foreign buyer financing. Working capital guarantee, I'm not going to spend much time on this. Ian did a phenomenal job. Our working capital guarantee program is very similar to Ian's export working capital program, the EWCP. Big difference, Ian can go up to 5 million. I can do any size. I can do 1 million up to our highest that we've ever done was 750 million. So what I always like to say in this slide, commercial lender, we always start with your bank. And ideally, the bank that already has a borrowing relationship in place with you. They like you. They're already lending money to help support your domestic business. Now you need to grow your exports. That works really well. We talk to the lender. They may, if it's under 5 million, they may opt to go with Ian's 90% principal and interest guarantee. They may opt to go with Exim's 90% principal and interest guarantee. Ian and I play very nicely in the same sandbox. We're going to talk to the lender and determine which program is the best fit for them. but it always starts with a lender. And it always works best if we're talking to a lender that knows you, likes you, is taking you to lunch. You've played golf a couple times together. I don't have a magic wand. If you don't have an existing banking relationship, I'm not saying I can't do it. It always works best when there's already a lender out there that's just looking for an excuse to lend you money. They just need that 90% principal and interest guarantee till they get it across the finish line. Restrictions, the important one I want to talk about, country limitation schedule. This is on our website. It's under tools for exporters. It is a very nice, pretty web spreadsheet that tells you whether I'm open for coverage or closed for coverage in certain markets. This is a little bit older one because you notice on this one, it looks like Argentina is okay. You don't see any X's in Argentina. If you go to my website today, you will see X's across the board in Argentina. I am closed in Argentina. Wish I wasn't, but Argentina being Argentina, we open them for a few months and then something happens in their banking sector or they have a wonky election and we got to close Argentina again. But it's on our website, tools for exporters, country limitation schedule. The SBA kind of uses it as reference. I always recommend any exporting company use this as reference to know whether or not a market that you're looking to go into, whether it's a no-go or not. If I can't get comfortable with the credit risk, Argentina is a good example. If I can't get comfortable with the credit risk, please do not try to take it upon yourself to get comfortable with the credit risk. You will lose money. There's my contact information. I only ran a couple minutes over. I'll buy Lou a beer next time I see him when I'm in Kansas City. That's my contact information. Feel free to reach out to me and I will hang around for questions and answers.